Hey everyone, in today's video, I want to cover the 3 dividend growth stocks that I essentially would hold on to forever and basically not worry about it, collect some income so that I could sleep soundly at night. And because you guys have been asking for it. Now, I also want to cover the process of choosing them. Like, what key criteria was I looking for in these 3 dividend growth stocks? Because sometimes you guys might not agree with me, and that's a-okay. But if I share the process of evaluating these stocks, then you can choose stocks that are more suitable to your personality, to your investing style. And I also want to cover, for the Canadians, the awesome dividend tax credits we get in Canada that you can essentially collect some of these stocks tax-free in Canada. And of course, I do cover something for you for the Americans out there where you can collect basically almost tax-free as well in the US. So if you are looking for stocks that you can essentially hold on forever and sleep well at night, then you got to check out today's video. Hey everyone, if you haven't subscribed to my channel and you're watching this video, I cover stocks and real estate investing to ultimately grow your wealth so that you can essentially live your best life. So if you haven't subscribed, please subscribe so you get the latest and greatest videos coming to you. Plus, it's free. So let's get back with the video. Now, before I jump into the 3 dividend growth stocks that you can essentially hold on to forever and collect the income while you're sleeping at night and basically not have to ever really worry about these stocks, I want to cover the factors and the criteria I use in choosing these stocks, because by sharing it, then you can do it on your own. That's pretty much why I'm doing this. So the 3 criteria that I look for is increasing revenue, which is the top line growth. I also look for increasing earnings per share, which is basically the accounting gymnastics that you do with the profits and the revenue, and then essentially it whittles down to the bottom line. So it's the earnings. So I want to see that it's growing, because if you get good revenue growth, and then you do all the accounting gymnastics and then get good earnings growth, then the company can essentially grow its dividends, basically grow its income, cash flow, and distribute it out to you every single year and continue to grow it. So for example, if you collect a dividend yield of like 4.5% right now, and the company continues to grow its dividends because it's increasing its revenue, it's increasing its earnings, then over a 10-year period, your 4.5% is actually going to potentially double, because they've been increasing their dividends year after year. So this is where I love the compounded growth in dividend stocks. Other things I look for is the payout ratio, because you want to look at companies that aren't going to pay out all of its cash to you. I mean, I would love that. But the kind of company has to survive, has to be able to make acquisitions. So you really don't want them to pay out like 99 or over 100% of their income back to you. So really, I look for a payout ratio of less than 75%. That would be like ultimately safe side. And there's 2 dividend payout ratios. You can look at earnings payout ratio. So essentially it's how much a percent of the earnings that they pay out to you. Now, sometimes that doesn't work, and I'll explain why a little bit later. You got to look for, like, a better metric to actually look for is the cash dividend payout ratio, is essentially the cash that they have on hand and how much they can pay you every single month or every single quarter. So I'm going to also look at the payout ratio. And of course, lastly, I want to look for how management has placed an importance to dividends, because if they've just been issuing dividends for the last couple of years, that doesn't mean that they're going to place a huge importance to paying out dividends to their shareholders. So I look for dividend aristocrats, or essentially companies that have been paying out for dividends for a very, very long time and have been growing their dividends. Now, the first stock I'm going to cover is TD Bank, which in my opinion is one of the best bank stocks to own in Canada. So if you guys want to do a deep dive on this bank stock, please check my video up here. Now, TD Bank is one of the largest banks in all of Canada. In fact, in North America, is the 6th largest North American bank in terms of total assets and market cap. Now, this bank is located in Canada, but has a substantial and huge presence in the US. So for all my US followers, you can actually buy TD Bank in the American Stock Exchange. Now, over the past decade, TD has been making lots of acquisitions and, of course, growing its revenue, growing its earnings, and increasing its dividends for like decades. In fact, this bank has been paying dividends for the past 150 years. Yes, 150 years. Now, most recently, one of the biggest growth areas for TD Bank is Ameritrade. So Ameritrade is essentially one of its brokerage, discounted brokerage platforms. What's amazing about TD Bank is that it has survived during the financial crisis and maintained its dividend, and also grew during this year despite the exceptional circumstances we're facing right now, and maintained its dividend. So it just says a lot about this bank. Also, it actually had decent provisions for losses. So basically already accounted for all the different types of losses it's expected to have this year and next year. So I would say this is like a beautiful A+ dividend growing stock. Now, in terms of revenue and earnings growth, I'm not expecting a huge ton for TD Bank for the next 5 years because interest rates are going to be low for the foreseeable future. I'd be like super surprised if interest rates actually shot up, in like next year. I'm expecting interest rates to be low. So that means its revenue growth and its earnings growth is going to be a bit slower than, say, the past decade. But because it's made a lot of smart acquisitions and it has its growth, which is in Ameritrade, I'm expecting it to do really, really well and continue to increase its dividend. Now, expecting probably dividend growth of probably single digits, not like 10% or more than 10% year over year, but I would say this is a huge safe play. And looking at its payout ratio, which is around 50-ish, 52%, that's like exceptional, super exceptional, which means that it has a lot of room in the future to actually increase its dividends and pay out more money to you. Second stock I want to cover is Fortis, which is a huge dividend growth stock. Now, they own a regulated gas and electrical utility company in North America as well as in the Caribbean. So they're pretty diversified. What's exceptional about them is that they've been existing since 1885 and paid dividends for 50 consecutive years. What I really like about this company is they are delivering cleaner energy. That's one of their missions. And their mission is to also exceptionally reduce the carbon emissions by 2035 based on 2019 levels. They've also had 47 consecutive dividend increases, which is like, wow. Now you're probably wondering, how can this big utility company actually increase its revenue and earnings over the upcoming, 5 to 10, 15, 20 years? Well, they've been making a huge amount of acquisitions in the past 5 years. And with these acquisitions, it's pretty much guaranteed growing revenue and growing earnings for a long, long time. And not only that, they also have a plan to reinvest a lot of their cash into more acquisitions up until 2025. So basically, they have a huge runway for revenue growth and earnings growth. Now, in terms of dividend payout ratio, their dividend payout ratio is like 64%, which is exceptional, which is really, really good, which is less than 75%, which is my rule of thumb. Now, in terms of revenue and earnings growth and what does it mean for dividend increases? Well, the company has announced that they're going to increase its dividends every single year by 6% up until 2025. So it just shows the amount of confidence they have in their revenue and their earnings growth and basically developing enough cash flow to distribute dividends to all its shareholders. Stock that I'm going to cover is a big tech company, which is Microsoft. Now, I know Microsoft, we all know them through their Windows and their software as a system and as a service to everyone, but really where they've been exploding in growth is through their subscription model, which is their Microsoft 365. They've also really, really exploded in growth through their cloud-based system, which is Azure, and of course, gaming. So in terms of what analysts are thinking, for the next 5 years, for the foreseeable future, they're looking to grow at least 10% year over year. So what does this all mean? Well, because they're going to grow their revenue and they grow their earnings, and basically it's a huge cash king company, it has a lot of cash to pay out its dividends. And when it comes to Microsoft's payout ratio, it's super low. We're looking at around 32-ish%. So it has a lot of room to increase its dividends back to shareholders, which is like, yay. Now I'm expecting to have its in dividend increases probably like less than 10% year over year. Although its dividend yield is not something to get super excited about, but I would say it's a super safe play. And if you hold it for the long term, you're going to get some decent income from Microsoft, just like Warren Buffett held on to Coca-Cola like from way back. Now, we are so lucky in Canada to have the dividend tax credit. What this means is that we can essentially buy all these Canadian companies in non-registered accounts and collect its dividends tax-free up to $50,000. Now, how this works is that in Canada, they have like a gross up factor. I'm not going to talk about it because it's super complicated. At least for me, it's complicated. But essentially, you can collect dividends up to $50,000 tax-free if you hold like Fortis and TD Bank in non-registered accounts. Now, what's great about it is for people who want to basically retire early, take career breaks like me, take mini retirements like me, then you can essentially draw out this income, say from your business, through the dividend tax credit and essentially get it tax free. Now, the only caveat to this is that if you had any other income like active income, or you're drawing a lot of money out of your RSPs, like your dividend tax credit, you can't get it all tax free. You got to talk to your accountant about this because there's like a balance between getting tax free dividend and then getting other sides of income. But there is a cool way of getting all these dividends tax-free if you decide to retire early and take mini retirements. Now, if you're looking to retire at the traditional age of 65 and you don't have a pension and you don't have a big RSP account, this is a great way to also draw dividend income basically tax-free. Now, if you're in the US, there are certain rules where if you're under a certain tax bracket, you can get very, very low taxation when it comes to dividend income. So you can essentially buy Fortis and TD Bank and Microsoft and still collect a very low tax rate. Okay, now if you want to buy these stocks and you want to support this channel, please check out my link below for a Wealthsimple trading app, which essentially can buy these stocks commission free. Everyone, if you found this video super, super helpful, please smash that like button, like hit it, hit it, hit it. And plus comment below. I was thinking of making more of these types of videos where I talk about how can you get dividend income tax free? What are some ways you can start right now, even if you're in your 40s? Anyways, let me know in the comments below if you want to see more of these types of videos. How can you compound the growth in dividends and basically double your dividends, say in 12 years, and continue that for the foreseeable future and compound the growth such that you collect a decent dividend income tax free? Anyways, comment below. I'll see you in the next video.